And for those that joined us late, you actually joined us on time. We wanted to try something new and put the slideshow in the Omnovia presentation for ease of use, number one, and also for a better connectivity and a better viewing experience for you guys. So with that said, in the person's methodology, tonight I wanted to share with you some live presentation screenshots, but in the spirit of things, we're going to continue on with some of the material that I believe is actually very important in analyzing the markets right now and trying to get an edge in trading. First and foremost, let me just mention that this information is copywritten. Pretty much is frowned upon to view it, copy it, resell it. I don't think this is for anyone's purpose other than education, and most of you are pretty much here, as I see a lot of familiar faces and familiar names. But by law, the government also would like me to ensure that you know that trading is risky. So with that said, let's continue on. I have a lot of students in here tonight. Arthur, Clayton, I see a lot of Gina. Good to see you. Jeff, of course. Mark Wilhelm. Mark Wilhelm. Didn't mean to throw your last name under the bus, but my gosh, my friend, you're going to love tonight's presentation. Most of you traders that like bonds, you'll probably relate to a lot of the information that I'm going to share with you in just a minute. So with that said, in case you're not familiar with my work, I've written several books now that I must say Candlestick and Pivot Point Trading Triggers. That first book there is now officially over a decade old. It's been a decade that I've been sharing the message of high close doji, low close doji, pivot point moving averages. Our indicators have been, I think we're celebrating 9 years now on Thinkorswim's platform, both the PPS as well as the person's pivot indicator. Mastering the stock market, that book came out, now it seems like it just came out, but it's 3 years old, and everything in that book is pretty much up to date, things that you can continuously do to this minute, especially how to work and run the PPS indicator on TOS and run it on scans, and running those scans to give us a heads up on buy and sell signals, not just in hourly, 15-minute, daily, weekly, even monthly time frames. It also helps us get what I'll share a little bit tonight, of getting a better indicator of broad-based buying or selling in the market, and a lot of the scans that we also run and that we've created both in TradeStation as well as Genesis with the high close doji. So everything that you see in these books are actually techniques that still work to this minute today, in fact, as well as you're able to scan. That last book, that Commodity Traders Almanac, what I did and brought to the table on that was to bring high correlated stocks to underlying commodity markets. Back in the day, listen to me, about 5 or 6 years ago, very few people would ever be interested in trading bonds or bond-like ETFs. And now it's amazing, the regular retail client is very up on the various ways of trading bonds and actually partake actively trading several of the ETFs like TLT and TBT. So it's no wonder that the game-changing news about the Chicago Mercantile Exchange closing its doors. In case you didn't hear this, they actually finally announced it a week or two ago. I think it was 2 weeks ago. They announced, yes, it was when I was at the World Money Show. 2 weeks ago, they announced that they were going to close the doors to the exchange floor for open outcry products except for options, and that's, something to be determined pretty soon. But all open outcry pits are now closed as of, I believe it's July 2nd. Another game changer happened. We made a nice presentation a month or so ago regarding the CME's move for the first time in history to charge active traders for the data in order to trade. Kind of an interesting, even though it's a small fee, it's a pittance in what we trade. The fact is that you have to pay your way now in the market. So with that said, it's kind of interesting how the Commodity Traders Almanac, and here's how that sentence ties in, is that I was taking highly correlated ETFs to the underlying market, like USO to crude oil, UNG to natural gas, things like that, and applying ETFs, exchange-traded funds, and ETN, exchange-traded notes, which now there's a plethora of new products to trade based off the commodities. So with the availability of trading online and one click-through option strategies on ETFs, we are and have noticed a huge decline in volumes of trading and open interest in some of these commodity markets. And I don't know if that's the cause and effect of maybe the leftover effects from MF Global's demise or PFG, those clearing firms, not to bring up bad news, but the great news is that we are seeing more activity in ETFs, in commodity-based markets, and there is a strong correlation to the increase of options in stock and equities, especially as it relates to a lot of these exchange-traded funds. So the book, The Commodity Traders Almanac, pointed that out, especially the seasonality of a lot of these stocks that are highly correlated to commodities. It's amazing the compliments that we get on that book and the work and the other educators, system writers, everywhere from almost every platform comes up and says, yeah, I use that book. And some people, it's funny, I was just told that at one of the conferences that they didn't know I was the actual author of the book, which, my name was right on it, so I'm sure that's easy to miss. But in any event, what we have going for us right now in the marketplace is, I think traders have gone, and I love this line, give a man to fish or teach him to fish and he'll eat for life. Well, which is it? I mean, it seems a lot of traders wanted to learn how to do it on themselves, and now I'm finding people just want, just show me the fish. I'm tired of learning. I don't know if you're there seems to be so much education out there, and some of it works and some of it's not, really all that effective. And I think the way things have changed from a technical perspective and the rules of the game that have changed, such as dark pools, such as people trading more options. I mean, we've seen a lot of individual investors struggle with use of volume histogram bars, which we have a solution to that. In other words, a lot of people find that if a trend's going up, it's up on light volume, but yet that normally would be the recipe for a weakening trend. But yet, they find the market continues to blister straight through the moon, and maybe I think the answer is because volume histogram's not as effective as it once was or written about, is because there's so many variational ways to trade the market, options, and there's so many institutions implementing their own dark pools, meaning they're matching their own trades within their own organization, then reporting it to the exchange later. It masks or hides the actual volume. And so we want to look at volume trends. So I think traders really want to learn just how to, they just don't want to learn to fish, they just want results. And that's where I think we're at right now with the way the general public and small speculators are. I mean, it's just like, hey, they don't trust this rally, they don't trust the government, they don't trust the way the system works. That's what a lot of people tell me. But yet there are a lot of folks making some really good, consistent money in the market as a result of their experience and their education. And I bet you there's a handful, if not a lot more, right now that I'm talking to that you've been around and you're starting to learn and get it. And I think that's fabulous. So how much literally does one need to learn in this market? I mean, can you achieve consistent long-term results without learning much? I think so. I think right now what we need is better market analytical skills. That's all. You just need to not, the old phrase, doing the same thing over and over again, expecting different results. Anticipating and having the ability to anticipate market opportunities is critical. And the solution there is to look at some of these seasonalities of the market and then make trade decisions based on facts. I mean, we are in an age of information, and whether it's Twitter, whether it's email, whether it's TV, newspaper, print, we get bombarded with information, and for the most part, when it comes to investing, it's really probably not the greatest information. We get thrown off. I mean, if you think about it, 2 weeks ago, everyone and their brothers and sisters were bearish on the market. I know last month, January, I couldn't tell you how many experts were paraded in the media saying crude oil was going to go to $30 and it was going to go a lot lower. I mean, that's pretty much a fact. I mean, how many guys out there, ladies and gentlemen, the whole world was telling us at the end of January that crude oil was going to go lower. The funny thing is, you know, you guys, a lot of people had a different opinion. They're like, yeah, crude oil going up, it ain't going down forever. But I think what we're looking for as traders, and we're all looking for this perfect trading method, right? The ability to spot high probability trades, you know, something better than, say, 67%. If you can get a high probability system that has something better than 67%, you're doing really, really, really good. Now, wouldn't it be great to have a perfect trading method that gives you a high probability? It gives you specific entry levels based on a price and a time condition, like buy it on the close, buy it on the open. Knowing exactly where to place a stop, knowing the expected time frame, okay? Knowing the expected time frame of where I was just told that there's a little sound problem. Let me double check as we're halfway in this presentation if the sound is still good. Give me a double check on the sound for a second. See, some people, for the majority, everyone's saying the sound is perfect, and a few people say the sound's bad. So here's what you need to do. For those that have bad sound, close out your browsers. If you have too many browsers open, if you have too many platforms, or if you have too many programs open, it will suck some of the juice out, and then you'll have a problem there. So close out extra browsers, make sure that you've closed out other programs, and then everything should be just absolutely perfect, okay? Or as perfect as this internet can get us. So anyway, what I'm trying to do is point out to you the perfect trading method, and I think whether it's a perfect trading method or you trade perfectly, which is to wait. Now, that doesn't mean that you're going to have winning trades every time. It means you traded perfectly. You acted on a signal, you placed your stop where you should, and you have trailed your stop and scaled out. That discipline, getting into that consistent action, that's what we're striving for. That's what I think everyone's looking for, this setting initial profit target for scale outs, and of course, learning how to price your levels to trail stops. The funny thing is we've had that perfect trading method for the last 10 years in front of us. It's on page 214 in that book called Candlesticks and Trading Trigger Pivot Points. That book gave us, and where I shared with the world, a trading methodology of using the high close doji and the low close doji under certain conditions. It's absolutely fabulous. In fact, in the last 3 weeks, a couple of things helped us to determine the equity markets were range bound and holding near that 1980 level on February 2nd. Famous last words were of mine, hey folks, we're in a trading range, and when you're in a trading range, you look for buying opportunities. In fact, we even recommended to our trading community to buy the 120 strike IWM calls and the Feb 207 calls. They were a little out of the money, but they were 30 deltas. But if I think a market's going to move up fast and sharply, then a 30 delta directional doesn't stay at 30 delta very long. They actually double, and they do it pretty quickly. But we also ran a lot of daily and intraday scans, and this is one of the things that I want to share with you tonight is how to do this and why you should do this and how it's going to help you make money. Institutions tend to spread their buying programs over time to not only ensure proper positions, but do so to get the best average pricing. In other words, they don't say, hey, buy me, I need to buy 50,000 shares of Apple, do it at the market. They will do it over time. So they'll buy some on the open, they'll buy some midday, some every hour. Some traders say, buy me 300 every hour on the hour until the order's filled. That's an actual order. So to spread out instead of going all at once, they don't just do it for one market, they do it for the entire sector. I don't know if you've noticed this, but if a sector is going to be very strong, you start to see, and it's real easy to get a listing of this. You just get your a watch list of a specific sector, whether it's utilities, biotechnology, whether it's financials, regional banks, whatever the subsector it is, and list and just tabulate all of those stocks in that sector. And TradeStation's very effective for doing this. And what will happen is you'll start to see not one or two, but all the stocks go green or positive on the day. That doesn't mean it's just retail buying. It means it's probably broad-based institutional buying across the spectrum of the market. So with that said, I think that when we ran scans, I just wanted to share with you, and I got these charts that you're going to see, amazing, but on about from 1:30, January 30th, when the world was falling apart, right, through January 3rd, we ran scans and picked up numerous HCDs. If you see the word HCD, what that means is high close doji. So anytime you see this HCD, it stands for high close doji. A high close doji means, in case you aren't aware, the market forms a doji. A doji is defined by a market time period where the market closes at or about where the market opens. And you get this little hash mark for those that do not understand a doji. In Candlestick, a red candle, just so that you, just to reaffirm, a red candle signifies that the market has closed beneath the open, okay? A green candle would signify that the market, a green candle signifies that the market has now closed above, this is the close, and I know this is basic, but just to rehash, the market closed above the open. What the high close doji signifies, a high close doji, meaning the market made a higher close than the doji's high. High close doji. If that's the doji, and within so many bars, there's specific rules of the time frame that has to occur, the market closes above the high of the doji. So a higher close above the high of the doji triggers a bullish response. The key is the market has to have been in a downtrend, so there has to be, in order for the market to have a reaction to the upside, it had to have an action to the downside, a reversal, if we may, okay? So when we look and run for a high close doji, I mean, all of a sudden, these are just a few of the names, but in the financials, we had Schwab and Regions Financial and technology. It wasn't the fact that we had stocks, but an entire sector. Matter of fact, we had discussions about this, but the SMH, which is the ETF or the sector on semiconductors, right? The SMH itself formed a high close doji. We had, in fact, these are some of the stocks we actually had mentioned, like Best Buy in our weekly observations. Materials, Owings, Illinois. These, the OIH, the XOP. Many of you, if you get my weekly thoughts and observations, it's been posted on, we send that out by email to our database. We've been doing it for over a year as a kind of a pilot program to share our thoughts and ideas. And these particular names, a lot of these names, even the ITB, these were all, the ITB is the ETF on housing, which includes the home builders, all right, like Toll Brothers. In fact, KB Homes, DH Horton, Lennar, Pulte Home Group, they are all contained in the ITB. In fact, you take a look at this, limited brands, Victoria's Secrets, TJ Maxx, Ann Taylor. In fact, last week, if you go and you look up my tweets, we tweeted about ANF having, hey guys, ANF had a high close doji and it's due for a short-term pop and it had good volume. So if you understood what HCD, and if you don't, you do now, it means to take action immediately. You buy on the close or the next session's open. And you do have a defined risk. Your stop goes underneath a specific low. and you're looking for immediate results within 1 to 2 time frames. So here's a trick just to fill you in on. Let's say I have a weekly high close doji, and I said that you need to see positive results within 2 time periods. If I have a weekly chart and I need 2 time periods, I'm looking for results within 2 weeks. If I have a 5-minute chart and I see a 5-minute high close doji, then that means within 2 bars is what? 10 minutes from now. I need to see immediate results within the next 2 time periods, and positive results either is in the form of positive directional move like higher high, higher low, or if you're bullish and get long, what could be more positive than making money? So you want to see the position appreciate in value. And so, by the way, since the time I tweeted this out in ANF on Friday, the market opened a little bit lower. By the end of Friday on the close, the market was up. You're going to like this. It was up over 5%. And that's just a, by the way, guys, here's just a favor as a, one trader to another. If you can get not a $5 move, if you got a 5%, that's what I'm trying to put up here, 5% move in a stock in one day, guys, it used to take, and that's without earnings, it used to take a year to get a 5% return. So we definitely have a lot of positive patterns and setups and signals. So I wanted to let you know that this methodology is extremely easy to learn, and we've had huge success. And I'm telling you, this event tonight promises to give you some powerful insights that you can apply, not just immediate, maybe even tonight's trading session overnight in the Asian session. But I'm going to walk you through this entire session to go over some trades in detail, and I'm going to be providing you with some information on how you can receive some follow-up training directly from the originator and a true master of the market if you're interested at the end of tonight's presentation. By the way, it might be hard to see. The reason I wanted to load it up into the Omnovia platform is so that we could have clarity and good visualization. But first off, you can see that this candle is orange. It's color-coded because this is TradeStation, my indicator package. TradeStation color coordinates things for me. Maroon is a low close doji. Orange is a high close doji. And many of you can see that little arrow right there. Just like on most trading platforms, the person's pivot study, which is PPS, the PPS indicator also fired off a buy signal. Now this is ANF. This is the stock that I tweeted out that's a high close doji. And I mean, it had an incredible swing to the upside. Our histogram momentum indicator as the market was falling was indicating that it was losing its bearishness. Now, over here, we have an indicator that we use. It's called the on-balance volume indicator. You've heard me talk about it before. What's really neat is as the market starts to move up, right, as the market starts to move up, we start to see an accumulation directional change in the sense that the volume is moving up with price. So when I mention, hey, we got a high close doji in ANF and it's on good volume, we should see an immediate pop. I think now you understand, if you go back and read those tweets, now you understand what a high close doji is and what my definition of we have a nice increase in volume. It's starting to, we should see a short-term pop. I didn't think we were going to see a 5% move in one day, but needless to say, it is a pattern worthy of adding to your arsenal and running and learning how to run scans of this. Now, this is what the chart looks like. Another aspect about it is not only do we have that daily high close doji I tweeted about, but it's in, what's the best part, a seasonally strong period of time. So that's what's really cool and why I tweeted that out. So if you can just learn to hang back, look for specific trades every once in a while, it's not like you have to look too hard and you don't have to over trade. You just got to know what to look for and be ready to trade it. By the way, what's interesting about that particular trade with ANF, I want to take it back down memory lane. This is the retail apparel sector. And I wanted you to see something which was really interesting, because when I'm looking at a stock, I want to know if that stock is in a strong sector. Is the sector itself, or is this just a one-time wonder, boy blunder, an upgrade on the stock itself? You know, if you buy a stock, does that mean it's strong? I want to buy a stock that's in a strong sector, right? And so what's funny is, you now know about the high close doji. You know, the funny thing is the sector itself generated a high close doji on, are you going to be ready for this? Just like I was talking about, February 2nd. This is the January, the brand new month. As you can see, the sector itself generated, that was Monday, this was Tuesday, okay, February 3rd, the sector itself generated a high close doji. That's pretty important information, something that maybe a few people may have missed. But I think by running scans, not only was the daily in a buy of the sector, but the weekly, the sector was not only in a seasonally and remains in a seasonally strong period of time, but it was in a weekly PPS buy mode. So it had a weekly buy, a daily high close doji, and that's the retail apparel sector ETF. So that's pretty decent. Now this is Ann Taylor. Now this is another kind of concept, because looking at Ann Taylor, when I tell you we were running scans and found a lot of stocks generating high close dojis. Now I can't take every single trade. I'm not an institution, but we have put out this information to our weekly planning and scanning group and to our trading community. The Ann Taylor, just to go back in time, not only, as you can clearly see, it's obviously in the retail apparel sector. Seasonally, it's strong. But boy, look at the continuation potential. This stock, Ann Taylor, took off and had, as the price was moving down, you can clearly see volume is going up, giving us a classic convergence, and then having that high close doji formation. That, to me, is, if we're looking for a sector that is going to go up, then I want to make sure it has not only one stock in that sector going up, but the stocks that are going up, I want to make sure that they're going up on decent volume. So that's key. Let me reiterate that, because for you guys out there that are looking to trade, I want to knock down not one or two names, but I want to look at the health of those names in that sector. So remember, institutions aren't just going to buy one day. They're going to add, they're going to buy over time, and they're going to do what's called accumulate. They're going to accumulate position. And one of the neat things that can help us to identify accumulation is if a number of stocks in a sector all have the same type of pattern and are all accumulating with decent volume. Same pattern with decent volume. That is the key to identifying whether a sector itself is strong or giving you the chance to see further gains. This is limited brands, LB, Victoria's Secret. Again, that was the same damn pattern that showed up on so many stocks on February 3rd. Look at the volume. Look at the volume. So we have the same pattern, same type of volume analysis, and seasonal trend. So the high close doji, plus the fact it didn't hurt that it generated right here, might be hard to see, it generated a PPS buy signal. But the fact that this stock, even, I would have to tell you folks, what's really impressive about this, as the stock market, if you remember, as the S&Ps were crashing, this stock was still defying gravity, as I call it, meaning it was isolated from the market's demise. The stock market was going down, and this stock was not following the overall market. So therefore, the term we would use is the comparative relative strength was off the charts on this name. Now, Scanning for specific patterns, like that high close doji, it's like using sonar, fish finders, and then troll with live bait. Your odds of catching fish are greatly enhanced, and I mean big game fish too. Now, if you're not into fishing, let me explain what we're really after when you're fishing. You're looking for yellowfin tuna, and that happens to be a yellowfin tuna. And yes, I've had experience of fishing a little bit. That's me. And I do have experience for scanning for specific patterns. So trust me, I have experience in both. I would like more experience catching the big game fish, and I'd always enjoy more opportunities of scanning for high close dojis, especially when the very next day you see 5, 6, and 8% moves on stocks. So just to let you know, which came first, the chicken or the egg? This is kind of interesting, this concept here. This is my 35th anniversary year of active trading. It was this summer. Actually, I'll tell you what. It was in. It will be in the end of April. It was the end of April. It was after Easter, and I had just met George Lane, and he invited me to come down and see what he did. And he was looking for a college kid to help him, and that was exactly. It'll be 35 years ago. Working for George Lane, 1980, April of 1980, for God's sakes. Wow, where did 35 years go? Any event, I just had a little flashback down memory lane. I apologize for that. But here's the thing. In the early 80s, I want to teach you this technique. This is pretty important, and it's really effective, and it's working still to this day. So this is pretty cool, all right? Now, back in the days when the bond market was, Reaganomics, the bonds were the big bad boy on the block. I mean, 30-year bonds, and I think Mark Wilhelm, he was in the trading room not that long ago, and Mark's still here, and Mark will know the bonds. I mean, that was the creme de la creme of markets that we had. In fact, the bonds were the biggest boy. They were bigger than S&Ps. Many of you guys may not even relate to this, but they used to beg traders to trade the S&Ps. And we didn't have E-mini S&Ps back in the day. It was 500 times the index. So every point in the S&P was $500. And it used to move around. And it was a wild, woolly, thin market when the S&Ps first came out. But the big bad boy on the block, believe it or not, was the bond market, the 30-year bonds. And one of the techniques that we used to use, that I still use to this day, is that the Dow Jones and the cash market, believe it or not, a lot of times, listen carefully, a lot of times the cash market, and maybe you've noticed this yourself, and if you have, pat yourself on the back because it's a good analogy. More times than not, the stock market or the cash market will lead the futures, not the other way around. Some people think it's the other way around. But there's an interesting concept that the Dow Jones, we used to use the Dow Jones Utility Index right out of the Wall Street Journal. So you would have the transportation, the Dow, and the utilities. That's the three markets that they used to have in the Wall Street Journal every day, right? And you'd look at that. And the Dow Jones Utility Index gave us a heads up on the price direction of bonds. It typically had a week to 10-day lead time. So I don't know, Mark, if you remember that, if you ever looked into that at the time, back in those days. Mark commented, huge. Bond boys always know best. Yeah, so the cash market, think about it. These guys in the cash market, they know what's going on with their industry, right? So basically it would be, a lot of information would come straight from we would get clues and edge from the cash market, right? So that's why a lot of commodity traders, believe it or not, especially in the grains, used to, in the Wall Street Journal, I'm not sure, I have to double check, but they used to list the cash grain prices from delivery points. And so I would see a lot of really successful, rich traders tracking the cash market, and they would see what was known as the basis. The basis was the difference between the cash to the futures market. That would be the basis. And so these guys were tracking the cash market versus also tracking the futures. And that is something that I picked up well over 35 years ago. We look at the cash and we look at the futures markets. Very similar to this day and age. If you guys hear CNBC, what do you hear on the news about fair value in the S&Ps? Well, that is a little bit different meaning, but there's still a basis or a spread between the futures and the cash market. All right? So this was so important. I actually included looking at the cash and the ETF and the futures markets, not only just in the CTA book, but also in my book, Candlestick and Pivot Point Trading Triggers. It's actually in the first chapter. I thought it was that important. It's actually in chapter 1. So with that said, when we take a look at the markets, I want to show you something about crude oil and take you down memory lane. Now, crude oil, this is about the time, many of you are, we're not going to rehash this. I've already beaten it up to death. But everyone and their brothers and sisters were thinking right in here that particular week that crude oil was going to go straight to $40, if not $30. The funny thing is, it enters the seasonally best time of the year to go long, and as the market was starting to go down, it was going down on a weakening volume. In fact, as the market started to, I didn't draw it correctly, but if I draw it, it's right there. You can actually see the day we formed the doji, that day right there, we actually had an uptick. The volume was upticking, which means signifying if this is a directional volume trend, if price is going down and volume is going up, it suggests that the market is actually recovering. It gave us a convergence buy signal. But that's not the real killer, all right? The real killer was that in this market, okay, it formed a high close doji on January 30th, and we had a very sharp rise in volume as we enter a seasonally strong period of time. Okay, that's great information. But while the world was bearish, what many of you now know, but probably weren't watching, which is why I kept tweeting and talking about the OIH and the XOP, the energy subsector stocks, is because those particular names, this is the XOP. We formed a high close doji in the XOP on January, right as you can see, the middle of the month, 2 weeks well before crude oil bottomed out. Okay? That's critical information. In fact, this is some of the names, if you notice, I mean, if you see, this is around the 15th of the month at Person's Pivot Support, monthly support, it did generate a buy signal up here. But remember, crude oil bottomed out on this date. And the market, this particular stock, I mean, for gosh sakes, it went from a low of 58 up to 75. I mean, no offense, somebody, if the media was telling you they weren't buying energy stocks, then someone's pulling the wool over your eyes, because someone was buying it, and they were buying it with decent volume. Now, that's just one name. What's interesting is it was many names. Valero did the same thing. Valero was bottoming out in the middle of January, well before crude oil bottomed out. So once again, some of the stocks, the individual cash market stocks, were leading the market or the commodity market higher. This is Tesoro. Tesoro was another name. I mean, again, so the stock in the sector that I'm talking about, nice uniform buy signal there, and again with strong volume. Again, another strong pattern. So it wasn't one name, it wasn't just two names, it was a bunch of names in that sector, and the sector itself was generating buy signal, a high close doji. So this is a doji right there. I qualify a doji if the open closes within a certain percent of the overall range. But needless to say, while Baker Hughes had a huge, that's tough to say 4 times, but Baker Hughes Hughes had a downside. Note the downside came on extremely light volume. But when it did generate a buy signal, it started to see that volume rise. So that's notice the light volume from the November sell-off. The PPS buy signal that ensued at person's pivot support. Again, one more stock in the list of names that were bottoming out, rallying in light of what was happening to crude oil. So while the world was thinking it was going a lot lower, professionals, no doubt, were buying, again, not at the end of the month, not when you think they were, not when they were telling you they weren't, because people on TV were saying, no, I'm not in crude oil. I don't have any exposure to energy. I think energy is going to stay away from energy. Well, somebody was buying energy because a lot of these names went between 10 and 20% higher in less than 2 weeks. No offense, but that is a big move for not one stock, but a lot of these names. We actually partook in the ConocoPhillips for a couple reasons. A, we had an objective of the 68 handle because of the monthly pivot and because of that little gap, and many of our trading community took advantage of that move. Volume, again, off the chart. So while we can't take every single trade, we did capture this move and accurately got a hold of it based on the market methodology that I'm sharing with you tonight. So in my world, and I know we started a little bit late, but I wanted to make sure that the quality that you could see this information was there, because it is a little graphically intense to teach about high close doji, how to scan for that. But, you know, I call it my person's little program here, jokingly saying my 12-step program. But, I mean, what we do is, and things that we use are my PPS buy and sell signals, because they're, A, easy to scan. Specific candle patterns, because why? They're easy to scan and, more importantly, extremely effective, and most importantly, they form frequently. I don't want to learn an obscure bullish pattern like an abandoned baby or an island bottom when it shows up once every 10,000 years. I need something that is reliable, that shows up regularly. And so I need to quantify it. So it's not just learning about the high close doji, it's the conditions of which the high close doji comes, as well as identifying a few other nuances, like seeing if other stocks in the sector go up, seeing if there's decent volume, and looking at those particular patterns. So that's why I look at the person's pivots, we look at certain chart patterns, we use that seasonal analysis, we use volume analysis. Now, I didn't talk about the person's histogram tonight, but I shared it with you with the ANF chart, where it showed the momentum was giving us a bullish reading before the buy signal ensued. And again, we have been talking a little bit about this thing called relative strength analysis. Some of you will be familiar with it being called pairs trading, or in commodities, we always just called it spread trading analysis. It's comparing one market against another market, okay? And so that's where we're at with that relative strength analysis, which I gave a simple example. Believe it or not, everything from point 1 to point 8 we've gone over tonight. This is another way of looking at spreads. Now, this might be hard to look at, but these are all spread trades. This gives us the horizontal line right here, or the vertical line, excuse me, is the date you get in it, and that's the price level of which you would be in. These are all spread trades that are seasonally a trade that we look to get into at specific times. In fact, we've been putting this out. If you go to your that weekly thought and observation, every single spread trade that we've put out has been a winner. It's really, and I mean, knock on wood, lots of wood there, lots of wood. Not every trade's going to go like this, but we've had some really neat trades that go with common sense. Believe it or not, there was an Aussie dollar, Canadian dollar versus the Swiss franc spread that you get into on or about the 24th. This year we got real lucky because the Swiss bank did an action 2 weeks before you enter that spread, which caused the Swiss, and of course with cheap oil prices, that made that spread dynamic to get into. In fact, this is the spread right here. You get in on that date and the spread has gone straight up. So the Aussie or Canadian, you can do one or the other. We put that out, and it's been in the weekly thoughts and observations, and it is still on the website. You can go up to Person's Planet, click on the blog, and it'll be right there for you. In addition, what comes first, the chicken or the egg? Well, does the sector go up, or do stocks within the sector go up? I mean, when a sector gets hot, I think you see individual stocks as a group move in sync, thus moving the pricing dial on the index or that sector. Commodity-based stocks can lead the move before the underlying market takes off too. Let me show you what I mean. All right, so remember I talked about in the old days, we looked at the Dow Jones Utility Index. Well, I don't know if you guys are, whether you're interested in trading bonds or not, I just wanted to show something to you which is really interesting. The Dow Jones, still to this day, the Dow Jones Utility Index generated a sell signal on or about, well, not on or about, but on the 28th of January. The bonds generated a sell signal about a week later on February 3rd. Okay? So again, the utility sector got the sell signal first and led the market lower, which was kind of cool, right? What's really neat is if you follow, and I just wanted to point this out to you, so maybe tonight, if you're watching the interest rate markets, if you're watching crude oil, if you're watching any other market that has to relate to a cash index, it may behoove you to pay attention to the cash index, because if you're just watching the TLT or if you're just watching TBT, what really sucks there is that they don't even generate a buy signal, a PPS buy signal, or a PPS sell signal until February 6th. And instead of selling near the highs, you're selling, which you may have made some money, but you're selling closer to the end or a more established trend. So sometimes you can get a better clue or get an edge in the market by looking at the cash market versus looking at or even the futures market. So looking at some of these indexes, the utilities or the transportation, you know, the IYT, looking at the cash index market may give you a better clue and give you faster information, a better edge than looking at some of these ETFs that a lot of people trade. Unfortunately, I have found people that they want to trade the ETFs on the financials, and unfortunately, what do? They're tracking the actual ETF. Well, okay, that's great, but the ETF is just a derivative of these other products. So it may behoove you to be watching that market, okay? So that's as far as trading. This is another concept that we do in our trading room, which we talk about, and there's all kinds of debates on how to create the knob spread. The exchange wants you to do it a different way so that you trade 3 notes to 2 bonds to get margin relief. And for 35 years, we've been trading the knob spread as a 1-to-1 unit, all right? Notes over bond. And when you do a 1-to-1 unit, most commodity brokers to this day, if you ever go to and talk to a commodity broker, a commodity trader, and say, hey, where's the knob spread at? He's going to tell you, oh, last on the screen is 1810, because that's the quick way of figuring it out. So I just wanted to let you know there's multiple ways of doing it. There is no wrong way. The exchange wants you to do it so you increase volume and liquidity to the contracts, but you can still trade it 1-to-1. The reason I do things on a 1-to-1 basis is so that I can track on a closing basis as a spread. I can track the chart, which turns into a line chart. And that line chart subscribes itself to being able to track it as a chart pattern, as well as it allows me to do what? See if we get a series of lower highs and lower lows. This was the exact point that we were calling for the market to break down. This was right before I left for the World Money Show. I told everyone, listen, you wait for this market. If it breaks below that 1929 level, then you can start looking at buying, getting short. Guess what? Getting short or buying TLT puts or buying TBT. In fact, we actually put in our weekly analysis, we even put in a double inverse ETF on the bonds for people to take advantage of. So spread charting the futures market is another way that we can get inside information as to directional trend changes. So if you're going to start to trade as we get into more interest rate sensitive moves, and eventually, I'm not saying it's going to be this week, but eventually we are going to start to see something happen to interest rates, and you're going to want to trade these markets. So perhaps your best bet, whether it's trading bonds, whether it's trading COW, which is an ETF on live cattle futures, whether it's trading Cafe, which is an exchange-traded note on coffee futures. I mean, my gosh, they got so many different things out there. It will behoove you to pay attention to watching some of these cash markets. So the person's pivot indicator, it is, I mean, a very powerful tool, which has obviously helped a lot of people and myself through the decades uncover predetermined support and resistance levels. We know that. You've seen that before. You probably have used it for a long time. And not only does it work in a daily basis, weekly basis, monthly basis, but as I alerted the world to several years ago, financial quarterly basis. And then Thinkorswim was the first platform I introduced the concept of introducing it to use of, instead of a monthly calendar, an option expiration third Friday of the month calendar, since markets tend to pin or conclude at expiration, so to speak. The PPS indicator gives defined triggers, both buy and sell. And of course, my momentum histogram is an early warning system. But I think combine all of that information and still knowing price patterns and volume, that's where you really do get a fantastic edge in the market. Okay? So that's, I think, in tonight's presentation, I think, you know, many of you, just believe it or not, you got a systematic approach on number one, how to get how do you get a buy signal and then act on it? What is a buy signal? Well, high close dojis. Where do you get in? You get on the close or the open of the next session. Your stop goes below the low of the doji or the lowest low of the last 4 bars, as I've written about, as it's been published and copywritten. Your profit objective. Profit objectives can be used as little as a simple 1-to-1 risk-reward ratio. So if you're risking 10 points, then at least be able to take out 10 points, right? If your system is only 60% accurate and you have a 1-to-1 risk-reward ratio, you're still making money. But you need to maybe scale out of something and trail your stop, and you have to learn how to do that. If you don't take money out of the market, you probably know the market will take the money right back from you. So it doesn't matter if you can get over that fear of or greed of, if I get out here, I'm going to lose profit. Well, if you get out of here and you trail your stop and the market keeps going, didn't you reduce your risk factor of being out of the market, take some money off the table, and still allow yourself to trade in case the market develops a trend? And that's one of the key elements that I think people really need to do. These types of patterns, whether it's the high close doji, whether it's the low close doji, a continuation pattern like the wedge formation, or the top pattern, which is more of a distribution formation, the M top, or the M top as it's referred, or the W bottom or accumulation, which sometimes that's exactly what you're seeing, an accumulation. Well, if you can combine those types of patterns in your repertoire, you're going to see some really neat things develop, and especially, I think, this year, based on where everything is priced. Look what gold's been doing. Look at crude oil. Things are moving. Prices are at levels where they are starting to see volatility and price movements. Look where the equity market is. The higher it goes, the bigger the correction is going to be one day. I think, obviously, the longer this thing goes without any meaningful correction, eventually the deeper the correction will be when it gets there. But that's not the call right now. But patterns will help you. Rising wedge formations, getting it near and then hard to see, but low close doji. Actually, this is a trade we took and bought put options on live cattle, by the way. Momentum histogram. This is the momentum histogram that identified as this market is trending up, it's losing its positive momentum. So we need to look for some type of clear signal. By the way, that's the clear signal right there, as well as a breakdown of a swing low. So either you can catch the high or look for, just like that bond trade. If I didn't tell you the difference, that little bond trade, looking at the knob spread with that rising wedge, right? This is the rising wedge, correct? If you noted, this is the swing point. Once cattle broke below the swing point, it moved lower, correct? So look at this. If I go back a few slides, incidentally, isn't this the rising wedge? And isn't that the swing point? And once you take out the swing point, there the market moves lower. So I'm not showing you a chart pattern from 1994. These are chart patterns that have occurred in the last, well, in this case, 10 days ago, 2 weeks ago, as well as this past year. So chart pattern analysis is vital and integral part of trading in the markets. By the way, this is a nice wedge formation. This was another trade we actually took in the room. It was a 24-hour to expiration. We did the weekly on earnings and played Starbucks and bought these 85 calls for 30 cents. We had a perfect textbook wedge formation, a rise in volume. The momentum was off the charts, showing that there was accumulation. And we had, besides the PPS buy signal, before 3 days before actual earnings came out. So this market was already in an accumulation mode, as well as just getting pumped. And it was very simple. We had a very simple, defined profit objective in the market. By the way, we also tweeted that one out too. So Starbucks earnings, based on not just the analytical tools, almost everything that we've been talking about tonight has been actively used to make money trading in the markets. And the best of yet, it's easy to teach, it's easy to learn. This is a little 5-minute trade setup in the E-mini S&Ps. In fact, as you can see, looking at specific wedge patterns and looking for times of breakout, accumulation of volume, positive momentum. These are all types of trade setups that are just dynamic. Now, here's how I believe I can help you. Person's pivots, they're free, and the PPS indicator are free on Thinkorswim. Now, if you're TradeStation users, the person's pivot is free. I want to make sure that all of you have an opportunity. We were out in Seattle this past weekend. Due to time constraints, we had to end a little shorter than we were supposed to. With that said, I made this offer out there. We're going to make the offer again. If you're interested, I believe I've made this offer before. If you have not taken advantage of it, you probably should take advantage of it, and here's how I can help you. This brand new study course, we did it over the beginning of the year. It teaches you exact time frames to trade. It teaches you how to use my PPS indicator, how to set up and scan for trades both with Thinkorswim as well as TradeStation. It gives you what and how to scan for sector analysis. It even teaches you how to look for what I was talking about tonight, comparative analysis trick using PPS, using the cash and the futures market. In addition, I have an amazing mechanical strategy system. This system will teach you how to look for these particular setups, more importantly, how to apply the breakout method for options traders, for directional trades. If you've been trying to learn options and you've been taking a lot of options traders, and I mean, people have been telling me this coast to coast, from Orlando to Seattle, they've been taking option classes, and everyone's teaching people that they should be in little risk strategies and be doing vertical call spreads. Well, the only problem is if a market has strong momentum and breaks out, how the heck can you take a profit unless it expires in the money at expiration? So vertical spreads is not the best directional trade out there. It's not the right strategy. I think there's the right strategy for specific market conditions. If you're very bullish, if you have a pattern that says, hey, by the way, within 1 to 2 time periods, this market should go up. Well, why would I do a vertical call spread if I know that within maybe 10 days, 2 weeks that is, on a weekly chart, the market might move up in my favor? Why would I do a vertical call spread? Why wouldn't I go more directional? And I teach exactly some of my top techniques that I've used for 35 years. Many people don't know this, but I started trading bond options in 1984 when they were first introduced. So I've had a little bit of experience in trading options. And yes, there's a time and place for everything. Not every strategy works every single time. You don't learn to do covered call writing strategies in a rip-roaring bull market. It's not effective. You don't do iron condors in a high volatile, choppy market condition. It may get a little hurtful at times. So we need to understand certain market conditions, trend, consolidation, and if the market's in a compacting potential breakout pattern, why you don't get in a neutral, non-directional strategy. These are the things, without a doubt, you need to learn in order to trade correctly, and it has that in this system. Now, if you're interested, we have the bundle package, both the course. Now, this is about 7 hours of instruction. So you get not only the PPS indicator combined with the person's pivots, the PPS breakout strategy, and we will get together and we're going to be conducting the one-on-one mentoring session with me, not my assistants, with me. If you want, we also are offering a special bonus just to follow through with what we're doing. You can join our trading room for 2 weeks. Now, I would recommend take the information first, study it, then join the room, okay? And you'll have access to our Monday planning and scanning and the weekly observation newsletter. That's the one that has listed all these fabulous trades, especially the OIH, the XOP, the ITB, and a lot of the other stocks as well that we've put out. If you want, take the time, just go visit Person's Planet, and you can go and scroll down and look at those tweets that we put out. You'll find they're extremely efficient and timely. So I want everyone, if you would like, take advantage of this. Learn this information. I tell people I should have made this course years ago, and I should have made this course mandatory for anyone using the PPS indicator. And for that price, especially with the trading system, it is unbelievable. Now, for those that have TradeStation and TradeStation only, I am also going to give a trial to this TradeStation indicator package that includes my scans, the proprietary scans, and as well as the radar screen. We have instructional videos and get together, which we're going to conduct one in less than a week, on how to utilize the TradeStation package. Generally, what I like to do is get together once a month and go through question and answers, and we're going to get doing that next week. So the Professional Series package includes the radar screen, my proprietary scans, and of course our mentoring sessions on a monthly basis. So that's going to be really nice if you're a TradeStation user. One of the neat things about that as a TradeStation user is that this course for TradeStation clients, not only if you're interested in finally getting the Professional Series package indicator with TradeStation, we will reimburse you for the trading course or apply it to the discount on that. But I want you to know something. Whether you get the course or just the indicators, either way, for TradeStation customers, there is a commission rebate program available so that you can get back your education fee. That is amazing. If you are interested in that, I would strongly recommend click on that link, personspivot.com, purchase the course, let us know. I'm a TradeStation user. We will let your broker know, give you a user code that you will apply, that you will get a credit on the form of a commission rebate for TradeStation users. So you can find that via the link that's been posted in the room right there. Just click on that link and you can utilize this information, and I'm going to tell you it will absolutely improve your trading results when you go through this information. If you're not familiar with everything we talked about tonight, definitely get this course. There's no doubt about it. I couldn't imagine trading, not really, having all these years to come up with this. To me, it's just second nature. It's fabulous. And I know we have quite a large following of people that have followed this methodology. It's helped them out. Take action. Take advantage of this. And if you're a TradeStation user, what better yet than to get a reimbursement for your education? Anyway, that is all I have for tonight. I hope that you guys found this to be supportive in some of the information that we've put out in the past, as well as what we are scanning for and will continue to look for in the markets in the weeks ahead. Again, with the seasonally strong period of time that stocks are in right now, and I know a lot of people are, really hesitant about this market. The interesting aspect is that the breadth and market internals, as we covered today in the planning and scanning, really do suggest that this move is sustainable, believe it or not. The fact that the bond market and the knob spread has finally come in a bit, that I think right there, that's what everyone was saying. How can the stock market rally if the bonds are at 150? Well, they're not at 150 anymore, and everyone got their questions answered there. But this is also, folks, this is an exciting time of the year. Probably not for those in Chicago or in the Northeast where, the weather sucks and it's snowy and cold. But believe it or not, we are having a seasonal change. We're halfway through the quarter. We're halfway through the month. We're going to get into March, and we're just weeks away from what? Well, if you're Irish, St. Patrick's Day. But we're weeks away from the end of the quarter, and in the South, planting season, believe it or not. So farmers will start in the next few weeks down south starting to prep fields for planting season. Can you imagine that? And so we have the grain complex, seasonal trades in the meat complex. And I think those are areas that are pretty not sexy, not savvy, but I'll tell you what, if you're interested in making money and having high probability, low risk trades, and it's not a lot of capital, it doesn't take much to study. If you know how to point and click a mouse, then you can learn how to do a spread trade, and you should learn how to do spread trades. With that said, until we see each other the next time, do take advantage of this trading course opportunity. I welcome you guys to join our trading room. I think you will find it very instructional. I'm in the room for the most part every day from 9 to 12 noon. If there's nothing to talk about, I really don't say a lot, but it always seems that I'm there when it's important to be there. And so with that said, I wish everyone a wonderful evening and have a great rest of the trading month. And for those who have already purchased the course, we are getting ready to have our one-on-one mentoring class together. So I'm excited for you guys to have joined us there. So take care, everyone, and I hope you found tonight's information worthwhile. Bye-bye, everyone. I actually just saw a question, and I was going to close up. And David, are you still there? Where's David? David, did you leave, or is David still here? David K., you're still here. Good. All right. If you just bought the PPS course and you've gone through it, you're coming in with me, brother. It's not a one or other. It's either or. We're going to have mentoring. So we do a separate one for. There's two different mentoring session, okay? You should get an email next week. You'll get an email next week, okay? You're welcome. Leah, that's the delta, that 30 delta rule comes under specific conditions. That is not something I do all the time. Don't walk away saying, oh, John buys 30 deltas, there's a secret. No, that's not true. A 30 delta was within a specific time. Okay? Mr. Chen, thank you very much. You are going to love the course, and now it's not short. That PPS course is approximately, I think it's 4.5 hours. So it is intensive information, but it's straight to the point, and it has everything you possibly need to know based on the PPS and how I trade it, okay? If you're interested and you have not gotten that course yet, you got to get it. I'm telling you right now, it should be mandatory reading, especially for that price. It's just the best education that money can buy, hands down, especially after I heard with what people pay for education nowadays. Folks, there's no need for that. But learn this methodology, learn the discipline, the pattern, when to enter, where to place your stop, how to place specific orders, whether they're market or hitting the bid or hitting the ask on a buy or using a stop to enter in on the breakout, okay? So get that going. There are a lot of self-proclaimed gurus out there, and yes, thank you, David. John says, David says, I know John, and he's the real deal. I think a lot of people know that. Maybe they just haven't been introduced to the right information, and so that's why I like the fact that people showed up tonight. I appreciate that, and to all my students, thank you all very much for coming tonight. We will see you on the flip side. Not many people will take and do exactly, not just put trades on just to put trades on, but actually tweet information that's relevant and accurate. And that, I think, all you had to know is what the stock symbol means, what HCD means, and it's pretty, it's you know, the neat thing about Twitter, it's time-stamped. So you can't talk about something after the fact. That's kind of the neat thing. So, in any event, guys, be good. Thank you all very much, and have a great trading week. Take advantage of that offer, and I mean that sincerely.